Hey guys, greetings, and welcome back. Welcome back to the channel. So this is Katlo Is the Sun, the founder and CEO of God Mode FOREX. Now, guys, today we're going to be having episode 2 of the trade breakdowns. So this is going to be episode 2 of the trade breakdowns, and I'll be breaking down the trade that we actually took on GBPUSD. And this trade is actually similar to the one that we actually saw on episode number 1, which we were actually having on Euro USD. So this trade was taken on the day of FOMC, but later on the day, not when the FOMC was released, but later on the day. So guys, let's get into the video right now. As you can see, guys, we are on the 1 hour time frame, and when we are on the 1 hour time frame, we are seeing that we were actually on an uptrend. We do realize that we were on an uptrend. As you can see, the market was pushing up, creating higher highs and higher lows. And then right here, we see the market. This was our range. Then the market broke that range. And when we broke it, it then formed what? It then gave us a chalk. It gave us a chalk. So it gave us a change of character. So when we had a change of character like this, we then realized that, okay, we are now on a downtrend. And like I said on episode number 1, when we have a change of character, we then expect the market to move from bullish to now bearish. But after a change of character, we are also waiting for what? We are also waiting for a retracement, because the market cannot move in one direction forever. So after we see the break of structure, the change of character, we then expected what? A change of character. As you can see on this chart, I've already marked them out, because I realized that on the previous chart, on the previous video, it actually took long to mark them out. So as you can see, break of structure. What do we do again? We have to check. We have to see if the market can return. Okay, after a break of structure, we expect the market to return to at least the 50% of the previous range. And where was this 50%? Let me take this to the wick. Oh, beautiful. As you can see, in this case, it did reach the 50%. But then in that day, we were surrounding the zone. We were actually around the zones. So let me delete this. So an indicator to say that we are now starting our retracement or a pullback is that we must see a chalk or a change of character to the opposite direction. We must see a change of character in the opposite direction. As you can see, the market was coming down, falling, creating lower lows and lower highs. And then we had this break of structure, creating a lower low, which then formed a change of character by taking out the previous high, which formed this new low. So when we had this, we then had a change of character. With a change of character already seen, what do? We then go to our extreme order block, extreme 1 hour order block, and this is where we found our extreme 1 hour order block. Let me mark it out. After we saw this extreme 1 hour order block, we waited for the market to actually come back down. As you can see, it came in the next candle, the next hour, it came and tapped into our 1 hour order block. Now we were looking for a confirmation entry. So let's now take it to the 5-minute time frame to now look at this trade in a much better scale. Let's look at it. Beautiful. As you can see, I had already marked it out. So as you can see, the market tapped into our 1 hour order block and then also into our 5 minutes order block. The reason why we chose this order block is actually quite simple, guys. Let me zoom in so that you guys can see what I'm seeing here and move this aside just a bit. As you can see, when you look down here, everything has been mitigated. We have this small imbalance right here, which the market can come and retest. But apart from it, most of the things have been mitigated. So this was our first point, which was not mitigated, which also left some inducement right over here. So when we see the market breaking down, coming back into that 5-minute POI, we then went to the 1-minute time frame to look for an entry. And this trade, guys, was actually executed using manual execution. It wasn't really done with any buy limits or sell limits. And the reason was because, like with the Euro USD trade, it was already late on the day. It was late on the day. It was already late on the day. So let me just show you what actually happened with this trade. Beautiful. So now remember guys, in trading there is always discretion, there is rule-based trading. Normally with a confirmation trade, that's why with the one that I showed you on the last episode, the last episode on Euro USD, we had a bullish anchor. We had a 5-minute bullish anchor, but in this case we didn't actually wait to see the bullish anchor. What we then did is that I just looked at momentum. I looked at momentum. As you can see, we are now in that 5-minute in that 5-minute POI. If we refine it, we'll have our 1-minute point of interest right there. So that's our POI. And then what we then did is that when the market tapped into this POI, I saw this candlestick printing, and when it printed, it went up. Then after that, it came back down impulsively. It went up impulsively, came back down impulsively before it actually closed up. When it went up for the first time, I realized that we've actually taken out this previous candle's high, this previous candle's high, and this previous candle's high. And that's when I decided to pull my trigger manually. And I had my trade right over there. Let me show you on the screenshot. It'll show on the screenshot. Now my entry was at 199. Okay, 199 72. That's 19972. That's where my entry is, and my take profit level was at that's actually where I closed the trade. Not really my take profit, but that's where I closed the trade at 960. And then we had our stop loss just right there, just right here. And the reason why is because we had this imbalance over here. Now because it was already late on the day, let me show you. This was our imbalance. This was our imbalance. And when we saw this imbalance, I knew something. So the reason why I put my stop loss right there, let me just put this out there first. The reason why I put my stop loss below here was because it was already late on the day. As you can see, it was around what time? It was already around 9. It was already around 9. So when I entered my trade here, the market pushed, and then I put my stop loss right at the beginning or at the high of this candle. Why? Because if ever the market was to come down, it means it will be mitigating this imbalance, and therefore I would now have a new entry on this POI. So because this was my first entry, I actually was comfortable taking the trade from that zone. As you can see, this was a beautiful trade which went for a 1:16.47 risk to reward. Let me take this back to the 15 minutes. And just like on the Euro USD trade, I was aiming at what? I was aiming at the high that was created after this change of character. So this was actually the trade that we took. I hope you guys learned a lot from this video. I hope you guys enjoy these videos, guys. I hope you really enjoy this video. Please do share with some of your friends. Please do subscribe. Please do like. I'd really appreciate it, guys. Help me grow on YouTube. I'd really appreciate guys a lot. So this is your boy Katlawa Ace of the Sun, and I'm signing out. Stay blessed, stay lovely, and stay profitable. Love you guys. Signing out.